Welcome everyone to today's webinar all about PPP 2.0 and the employment retention credit for nonprofits. I'm going to give everyone just a few minutes here to log on. A few housekeeping items before I kick it off to our amazing experts. We are recording today's presentation and we are accepting questions. So in the Q&A function or in the chat function, you can put in your questions for our presenters to be able to answer, and the recording will be available within 48 hours. And with that, I'll go ahead and kick it off to Mr. Tom Schulte.
Well, thank you very much, Marie. So good Wednesday morning, everybody. My name's Tom Schulte. I lead the Southern California nonprofit audit practice, and I partner with Renee Ordno, Ken Teasdale, and Mike Bolton in providing nonprofit expertise to Southern California. So I saw in today's audience, we have many old, new, and soon to be discovered friends amongst us. So welcome, everybody. I thought I might just share this to set the backdrop for the next hour or so. This morning, my 12-year-old texted me here in the office. I hadn't seen her, and she wanted to know why I'm in the office today. And so I told her I'm moderating an FAQ with the BOS group on PPP, ERC, and SVC for NFPs. She sent me back and said, OMG. So I want to send one back that says, LOL, isn't dad humor great? So today we're lucky to have two experts to answer your questions. And the first I'm going to introduce is John Schweitzberger. John.
Hello there. How are you? Thank you for joining us, everybody. I am a partner in our El Segundo office in Southern California, and have been living the PPP dream. Some dreams are good dreams and some aren't. So I've been living it now since day one for coming up on a year, and happy to have the opportunity to answer your questions today.
One of the things you might notice is John has been such a presence in front of webcams lately that he's bought his own Larry King style microphone. So you'll be able to hear him very well.
Kansas City, what's your question?
Matt Petrosky is our other expert. Matt?
Great, thanks, Tom. Hi, everyone. Great to be with you today. I'm Matt Petrosky. I'm a director in our nonprofit tax practice. I work out of the San Ramon office. And even though my day job is helping nonprofit tax clients all the time, somehow when John jumped into this day one, I raised my hand as well. So I've been working with many clients and also John and his team on the PPP since day one as well.
You kind of rethinking that raising your hand thing, Matt?
That'll teach you, right? So in the audience today, we have a broad spectrum of exempt organizations, including animal welfare, private schools, environmental foundations, faith-based, social service, museums, performing arts, and trade orgs. And that's good because there's some love for all of you in PPP 2.0. 501c4s, no love for you. But hopefully we've all seen the 1-hour video clip that came to your invitation as to the PPP and nonprofit organizations. And so you know the basics about the act. So today we're here to solely answer your questions related to PPP, the employment retention credit, and also the shuttered venue credit. So let me start it out. And gentlemen, knowing the audience that you're addressing today, maybe you could just tell us how PPP 2.0, and let's call it 2.0, differs from PPP 1.0. John, maybe that might be one for you.
Yeah, I find it a little bit easier to refer to it as PPP 21 versus PPP 20, responding to COVID-19. So there we go. We can add to your acronyms for your lovely daughter there, Tom. So the PPP 21 or 2.0 is basically PPP 20 reopened for some people, but with some interesting differences. So just so that we're all clear and level set on it, there are two different loans available depending on your situation. There's a first draw loan, which is for people who did not take out a PPP loan in 2020 or in PPP 1.0. And the first draw loans basically have the exact same rules that they had last year. Still a $10 million cap of a 500 employee limit. The math is still basically all the same. The restrictions and eligibility is still largely the same, although they have opened it up to a few, notably the 501c6s and the housing co-ops. The other part of it, though, now that is new is these second draw loans, which are for people who did take out a loan in 2020 in the PPP program. And that's where the rules start to get a little bit differently. The eligibility test in the first go round and for the current first draw loans was pretty simple. Do I have economic uncertainty? And do I meet the size criterion? That's basically all you needed to be able to certify to, and you could get the loan. Now they're trying to make sure that the money goes to the most hard hit businesses and principally the smaller businesses. So there's several tests in eligibility. First, and the easy one is you had a PPP 2020 loan and you've used all those proceeds. Don't need to have filed for forgiveness or anything, but you've at least used all that money up and therefore need more. So that's a pretty easy test. Second test is your size. Are you under 300 employees, not under 500 employees like it is on the current new first draw loans or the 2020 loans? Now it's to the smaller businesses, 300 and under. And the third and stiffest test is, did you have a decline in your gross receipts by at least 25% in any quarter of 2020 as compared to the corresponding quarter of 2019? So second quarter versus second quarter, third versus third, et cetera. So if you can meet all three of those tests, then you do have access to these second draw loans. But the loan amount limits are substantially reduced. Recall that on the loans last year and the current new first draw loans for those who didn't take a loan last year, that limit is $10 million. Now, for these second draw loans, that limit is reduced to just $2 million. The math is still the same. It's 2.5 times your average monthly payroll. But now you do have a choice in terms of the baseline period that you use. It can be all of 2019's average, can be all of 2020's average, or beginning next week after February 1st, it can be your last 12 months average. So you could do Feb 1 of 2020 to January 31st of 21. So those are the big differences. And then the last piece is they've tightened the eligibility a little on businesses that have strong affiliations to China or that are involved in lobbying and political public policy kinds of things. Anybody that gets a shuttered venue grant is not eligible for this, as well as publicly traded companies. So those are the big differences, Tom.
Yeah, thanks, John. Matt, you've been through this with hundreds of companies or organizations at this point in time, and companies for that matter too, because you're in the for-profit side. What lessons did you learn in PPP 1.0 that our audience needs to carry forward to 2.0?
So I think one of the first things is really kind of seeing who the lender is, and one of the things we did see is banks were different. Very often they interpreted the guidance from the SBA a little bit differently. Some were much better than others in terms of customer service, the depth of their SBA knowledge, and really how they were able to help the borrowers. So just kind of understanding the bank technologies as well, and whether they were really prepared for it. So I'd say that was sort of one lesson is make sure if you did receive PPP, the first round, the 1.0, and are looking for 2.0, how did you feel about that lender? I know it's likely easiest to go back to that lender, because if you're using the 2019 average payroll cost as the amount for your loan, it's easy. It will be easier to go through that. But at the same time, if you're not, there are other options in some banks that were better than others. Also, kind of thinking of and we'll get to it. I think we'll talk about this a little bit later as well. The Form 3510, the questionnaire on the economic need for any borrower of $2 million or more. Kind of going through that process and talking through it's with our clients, just making sure that you're planning ahead that you've really given it the effort that is needed. And also in general, I think we've learned, and I think many of our clients have learned how best to pull the information, how to pull the payroll information that is needed in a way that the calculations are able to be made. And then now also making sure that we're planning around the credits, I think is the CAA has opened up some other possibilities with the employee retention credit that really weren't there the first time, where you couldn't receive the employee retention credit and the PPP.
Those were two questions that came from me just to start it out, get this going, but it looks like the audience is getting warmed up. So I'm going to ask one here because we got to give some trade associations some love here. They haven't had love for a while. I said, will it be possible for a 501c6 organization to file for both the first and the second PP loan in 2021?
I think it may just be a timing issue. So in order to be eligible for the second round, you have to have spent the funds. So that means you're going to have to apply for the first round and spend all the funds, and then do it all by in order to be able to file for the application by March 31st for the second round. I think it's possible. I think it's probably going to be very difficult just from a timing perspective, unless they extend the date past March 31st.
I had read somewhere too that since 501c6s were excluded from the first act, that the first draw they get would be first draw money, right? It would
That's
be
correct.
First draw.
Mm-hmm.
So it says also for 501c6 on the lobbying requirement, it's something that I saw that you talked about in the video. How do you determine what part of the fee, what do you determine is how much is actual lobbying versus education or policy membership or advocacy? How is the advocacy considered? How is it defined?
Yeah, I mean, I think you're kind of getting into a definition obviously outside of PPP is what is lobbying from a nonprofit organization, kind of research, advocacy. I look at what is the definition of lobbying. If it's something that you would report on your Form 990 Schedule C, obviously that's lobbying. But kind of going back to, and this, I don't have a bright line answer, but kind of going back to the definition of lobbying, which is carrying on propaganda or otherwise attempting to influence legislation. When does it rise to that level? I think that's the key question.
John, I got a question for you.
Mm-hmm.
So I'm an organization. I missed out on 1.0 either because I was greater than 500 employees. I thought I couldn't make a case for need, or I did get the funds, but then I thought better of it and returned it. But now I'm less than 500 employees. I have need, and I wish I hadn't returned my funds. So am I out of luck?
No, good news is you are definitely not out of luck. You still qualify for a first draw loan. So you'll just go through the normal loan application process. Just make sure you get the right application form. It's the one that's dated January 8th, 2021. It's posted on the SBA and the Treasury websites. And just complete a first draw loan application. You should be good to go.
If I just dropped below 500 employees in 2021, though, that's
going to be a problem though. Yeah. So your average, you have to do the employee count based on the point in time that you are basically using to calculate your payroll costs. So if you're using 2019 payroll cost data, you're gonna have to use 2019 average employees. If you're using 2020, you'll have to use 2020 average employees. There's a lot of misinformation out there around this particular issue. So one of the things that, I mean, even in the SBA, I was back and forth with the head of SBA lending at a large regional bank yesterday, who was sharing with me the answers he was getting from an official at the SBA that was saying, no, the employee counts at the time of application. And I was having to provide chapter and verse to this head of SBA lending why the SBA guy was actually wrong, because the rules as published state nothing of the sort that it's at time of application. It says it's the average of 12 months. And there's an entire FAQ. It's FAQ 14. If you're really highly motivated to go read FAQs, that talks about kind of the options available to you, none of which says employee count at time of application. So where the SBA guy was getting, it's beyond me, but nonetheless, it wasn't accurate.
Here's a question from the audience. And I think I saw it also in your video too. So could you confirm if you have to complete the forgiveness for the first draw before you can submit for the second draw? And they say many thanks too, by the way.
Your many welcomes. And no, it's you do not have to have filed for forgiveness. You only need to certify that you used all of the funds. So the forgiveness filing on the first draw can come at a later time. And also, Tom, before we move on, I actually want to rewind a couple of questions. There was the question around lobbying activities, and there is actually a definition, a threshold of lobbying activities cannot make up more than 15% of the activities of the organization. Now, how you measure activities is a mystery to me. Or that the cost of those lobbying activities does not exceed $1 million during the most recent tax year. So there are some threshold definitions that are out there. There's more to it than that, but if you're very interested in that, you can just Google basically lobbying PPP threshold, and you'll get it.
Okay. Matt, what's the deadline for applying for the second draw?
So it's March 31st, unless they extend it.
Okay, very good. What was the deadline for a 1.0?
It was August 7th. I think they were multiple, but they extended it to August 7th.
Yeah, I thought it had been moved a number of times.
Mm-hmm.
Yeah, but you can still now apply for a first draw loan. Again, if you didn't get one last year, up through March 31st, the deadline applies to both first and second draw loans.
I see a real good question here from the audience. It's when talking to your board about a first draw loan, are there any potential drawbacks that they should know about before they take the PPP loan?
I'll take a first crack at that. Matt, add in whatever color you'd like. It depends on the size of the loan that you're contemplating based on your loan amount. If it's going to be a fairly small loan amount and let's say $200,000, and you want to make sure that it's as easy as possible to get forgiveness, you may want to downgrade that loan request to $149,999 so that you're under the $150,000 limit. You can file the very easy certification form 3508S when it comes time for forgiveness, and it's basically it'll happen for you. Alternatively, if you're going to be dancing around the $2 million number, you may want to evaluate that on a first draw loan. Remember, new first draw loans can still go to $10 million, but any loan that's $2 million or larger, as Matt mentioned earlier, is going to be subject to a Form 3510 economic necessity questionnaire. This is not a simple process. So you're going to want to be sure that you're on some reasonably stable ground for certifying that you need these funds for the continued operation of your entity. Matt, anything you want to add to that?
Yeah, I mean, I feel like, so even if you're under 2 million, you technically need to meet that certification of economic need. But
Sure.
I think kind of the other thing I'd like to point to is that the loan will become public. So I think it's and you have to make sure that the board is aware of the fact that, and now originally it was, I think they would, when it first came out and first became public, it was ranges that of loan amounts that all the borrowers received, but now the actual amount has come out. So I've always said if you're not comfortable having it in the LA Times or the New York Times, just saying that you received this loan, then maybe you don't feel strongly enough that you needed it. So I'd say that's probably one of the bigger questions is make sure not just the impact of the general public, but are your stakeholders, would would they be okay with you receiving the loan?
I've been to many a board meeting where you've put that out as a threshold question to boards, and they've all looked at each other and really questioned that one too. So I think it's a really good question.
Yeah, it's a great point.
So you bring up another point there too, man. You talk about need. So can you describe what need is? How is it defined? And then also what proof would there need to be included on the form 3510?
Yeah. So the economic need was never defined. The SBA, I think if everybody remembers kind of how crazy everything was, if you received that first round, when Shake Shack and Ruth Chris and the LA Lakers gave their money back, and the SBA had said we will let everyone know how we were going to audit for the certification of need. And then ultimately they decided, no, if you're under 2 million, we're going to deem that you met that certification. If you're over 2 million, we will audit. And if essentially, and if we disagree, you just have to give the money back. So it's never really been defined. The only thing we have to look at is the 3509 for for-profits and the 3510 for the nonprofits, which I believe received about 71 scathing comments from the public, including the AICPA, about how that form itself was not really, isn't really indicative of what the certification of need was supposed to be.
Let's be clear, it's a horrible form.
Yes, and not many have disagreed. But ultimately, it does need to be completed if it is over 2 million. So the first thing is looking at your revenue second quarter, and by second quarter, I mean calendar year quarter. I know a lot of organizations are June 30. So your second quarter of 2020, what was your revenue relative to second quarter of 2019? So it's really,
quarter.
Yes, calendar quarter. But so it's really comparing that period up to June 30 of what was your revenue, and really taking a snapshot that was not, I mean, there was no threshold. And it's also, the next is getting to the expenses as well. There are a lot of questions relative to how were you impacted by any government shutdowns? Did you do anything voluntarily? So I think that's where organizations really need to tell the story of how they were impacted by COVID and what the organization needed to do. I think with a lot of the nonprofits, some of the bigger challenges really has to do with the balance sheet and your cash, temporary cash and temporary cash investments. And it might look like a larger number than a for-profit that doesn't necessarily have an endowment, and also being able to talk to you about your endowment. If you do have one, very often nonprofits have restricted assets, and being able to really explain and make what looks like a bigger number, make it seem like you really didn't have the ability to access, or if you did, there would be significant impact to the organization. So I think that's probably the biggest takeaway. And I don't think there's a one size fits all. A lot of it depends on the organization, but also making sure that you tie in back to one of the goals of the program, which was to give organizations money to keep people on their payroll. So I think that's a big part, kind of if you didn't receive the money, what would have happened? I think many organizations would have laid people off.
Yeah, they really get into a lot of details that seem to be presumptive of guilt in this form. Like, did you pay anybody over $250,000? Why does that matter? All right, well, does that mean that if I did, I must not have needed the money? What was your cash position at the at the end of the quarter before you applied, and how did that compare to your cash position at the same period the prior year? What happened during the second quarter of 2020 in terms of your revenues and receipts? And maybe you didn't get hit till the third quarter, but they don't ask the third quarter question. They only ask the second quarter question. And then depending on what type of entity you are, if you're a school, well, what's your average tuition? Did you offer financial assistance to anybody? Did your tuition decrease in last year compared to the year before? And You know, if you're in healthcare, well, how much of your revenue is a function of patient care activities and things like that. So there's a bunch of stuff in there that really kind of, as I said, just seems to be unrelated to anything around economic uncertainty that you had to certify for on the front end. But this is a way of being able to get at, yeah, okay, but you know, we think you had enough cash. Well, you know, if I've got $1 million of cash, or I've got $100 million of cash, if I'm burning through it at, you know, half again more than that every month, $100 million of cash isn't going to take me very long. So there's a lot of things in here that just aren't particularly helpful to your cause. So if you are in that situation where you're over $2 million, this form, as far as we know, it doesn't matter how many scathing comments they got, they haven't changed it. And my guess is they won't. So just make sure that you are preparing a good narrative to supplement this, that provides the context that these questions don't give you the ability to give that context. You want to make sure you're going on the offensive and not playing defense on this.
Yeah, that raises another question too, John. It says, so you talked about the $2 million. Does that $2 million, does that include 1.0 plus 2.0, or is it each standing on its own?
Great question, Tom. One we've gotten a lot of, and one for which we do not have a definitive answer. We've gotten no indication whatsoever that they are going to combine them and say, well, together you got $2.5 million, 1.5 on the first go and 1 on the second. So therefore, we want to know about your economic necessity. They've given no indication that they're going to ask that. I guess thing that gives me some comfort is, even if they do, if you applied for a second draw loan and got one, well, you had to meet the eligibility criteria, one of which was you had gross receipts declines of at least 25% in a quarter in 2020 versus 2019. That's sort of, to me, is prima facie evidence that you needed the loan. You had significant impact to your business. So even if they do go down that path, and again, just to reinforce, they have not indicated that they're going to, but even if they do, if you got a second draw loan, it's because you needed it. And I would think that that would make that a fairly easy process to go through.
What if I wanted to make my life easier? I'm seeing some questions along this line, and let's say I can in first draw, I can receive in excess of $2 million, but I say, why would I want to do that to myself? Can I make it for $1.9 million?
Sure. Yeah.
And then I reduce
the risk on those things. Yeah. The loan amount calculation is your maximum loan amount. Doesn't mean you have to take that amount. You can, if you so choose, but you're not obligated to. So like I said, let's say at the other end, you're calculating out to 175,000. You can take under 150 if you want, with a look ahead to the forgiveness side of things. You can do the same if you're hovering around 2 million. Other than that, it's going to depend on what your particular need and situation is, how well you think you're going to be able to get through all of that money for authorized uses, keeping in mind that there is this 60% payroll threshold. So if you cut your staff way down, you might qualify for a lot more, but you have no way to be able to spend 60% of that large amount on payroll because you just don't have the staff to pay. So then your forgiveness is going to be limited. So it's a function of kind of what's your particular need in your entity. Is it, I want to maximize the amount of money I can get, and if I don't get it all forgiven, that's okay. The rest of it I owe back at 1% interest over 5 years. Not a bad deal. Cheapest money you're likely to get. Or if you want to say, no, I want to make sure that I can get all of this forgiven. I don't want any repayment obligation on the backside. That's fine too. You're just going to want to make sure you're doing some modeling so that you're not taking out more than you can actually spend on payroll to be able to hit that 60% threshold.
Here's a good question for you, Matt. It comes from our client Kareem, actually. It's PPP 2.0 has a 300 employee maximum versus 500 for 1.0. Information thus far is that include, I think what he's getting to is what is an employee, what included for qualifying for this, and then how does that differ from the forgiveness aspect of it as well?
I think it's similar to the first round. Is the qualifier is headcount and not FTE. So ultimately, when you go through forgiveness, those who haven't gone through it is based on FTE, whether there's an FTE reduction, which an FTE is defined as 40 hours a week. So the eligibility, the 300 goes back to the headcount. So part-time would count as one for headcount purposes.
You're counting noses there.
Yep.
Right.
Yeah, they go back and forth. On the front end for a loan app, it's count your W-2 noses. On the back end for forgiveness, it's a 4-hour employee is not the same as a 40-hour employee, where it was on the front end. Why they have that is anybody's guess, but it's very clear on both the front end and back end, and they are different.
Okay, and that's the same for 1.0 as it is for 2.0 then.
Yep.
Right.
Here's another question. Is there seems to be rumors regarding changing the numbers. Have you heard those rumors?
Changing which numbers?
The 300 and the 500.
No, I've heard nothing of that sort. Matt, have you?
No, I haven't heard anything there either.
The one thing that is happening right now.
I think Kareem's trying to start that rumor, frankly. Yeah.
Fair enough. The one thing that is out there right now, for whatever reason, the SBA has programmed into their portal a $30,000 per person, per employee, I should say, cap. And if your average is working out, let's say you qualified for $300,000, but you only had 5 employees, so it's a $60,000 per, then that's going to kick you out and be denied. There was conversation with the SBA yesterday that said, well, maybe we'll increase that to $35,000. This was completely brand new to anybody yesterday. The American Banking Association sent a rather scathing public letter to the SBA going, your system's a mess. Where'd this come from? It's not in any regulation. It's not in any guidance. What are you doing inventing rules here? Basically stop that. So that is out there as of yesterday. We don't know if that will continue. And the way they were applying it was just flat wrong. And it gets back to this whole conversation we were having around how to calculate the number of employees. So, for example, I qualify for $300,000 worth of loan based on my 2019 payroll when I had 30 employees. Now I've had to cut and I'm down to 5, and you're going to decide to take 300,000, which by your rules, that was the math that's available to me, and divide it by 5 and say 60,000 per. That's unacceptable. And I don't get a loan, because you're now saying a 2019 average monthly payroll times 2.5, but a 2021 employee count. Well, those are apples and oranges very clearly. And nothing in any of their guidance, as I said earlier, talks about number of employees at time of application in terms of how you calculate that. So they're doing some very odd and more or less off the books things in the SBA systems right now. It may very well change even today, but I just wanted to give you that heads up that that's out there at the moment. And it's, like I said, completely off the books and not in any rules that they've published anywhere.
Somebody wants clarification. I think we covered this already, but if an organization took out a 1.0 and then paid it back immediately, if they apply for a fund now, it's almost as if they didn't have a first draw, right? So they're back
Correct.
to first draw status again,
Yep.
right?
And first draw status, first draw rules.
So let's get down to 50, the poor old 501c6s out there. So they weren't in the first act at all, and now they've can't have more than 300 employees. So we're not talking for first draw, because this is for a 501c6, this is considered first draw for them.
Yep.
But they're not 500 employees, they're 300 employees.
Mhm.
What gives? Who hates C6s in the government? What's the story?
I don't know if I have any insight in that. I mean, it could be just that really it's kind of focusing on the smaller organizations, maybe just making sure that kind of going back to making sure that those organizations are following the lobbying requirements. And maybe they think that, that really they're doing a favor for those organizations that are eligible. So beyond that, I really don't have any insight.
I think it was Josh Hawley. That's just my guess.
Okay, I'm with you on that one. Are there any other special rules for trade orgs, Matt?
I mean, I think it's just the meeting. It's really the making sure that you've identified the lobbying costs of the organization and making sure that you qualify. So beyond that, it's you're following the general rules of using it's 2.5 times the average monthly payroll, and then using the funds on the allowable expenses.
I've got a question here. It says, is the form a done deal now? I'm not sure if they're talking about the 3510 or if they're talking.
Yeah, I think it's the 3510. And I mean, I haven't heard, and I know, John, you indicated you hadn't heard that anything has changed. And we are seeing clients receive it, the 3510. So I think the comment period was due right around Thanksgiving. And if it hasn't changed yet, I don't anticipate that it would.
Let's talk about gross receipts for a nonprofit organization. How's that defined, John?
So gross receipts is not necessarily a term lots of people use. A lot of people say gross revenue. Well, there's actually some very specific definitions around gross receipts. So basically it's everything you brought in during your annual accounting period. And that is any sales that you had, of products and services. In the case of nonprofits, contributions, gifts, grants, things like that. Dues or assessments, that's all part of gross receipts. Investment income like interest and dividends, royalties, if that's in play. And curiously, at least to me, Matt, maybe you've got a better understanding than I of why this is included in the not-for-profit definition of gross receipts. But it also includes the gross amount received from the sale of assets without reducing the cost basis or any of the sale expenses. And this is the reason I say it's a curious thing to include that, because on the for-profit side, where they define gross receipts, it specifically excludes net capital gains. So, Matt, do you have any insight as to why that's in on the nonprofit side?
Other than Josh Hawley, right?
Yeah. Well, I mean, unlike the for-profit side, they define gross receipts in the actual statute, and they defined it by referencing Internal Revenue Code 6033, which
doesn't define it.
As everyone knows, well, not everyone. When you go to 6033, it's not there. So you have to know that it's actually the definition in 6033 is actually in the Treasury regulations. But I kind of go back to what is 6033. I mean, that's really how you're reporting on your Form 990. So I go back to Form 990 reporting, and I like to tell people, take a look at the heading on page 1 of your Form 990. There is actually a gross receipts number. Because a lot of times I'll get this question, where are you getting that gross receipts number? It's much bigger than our revenue. And it is because it's really just taking in Part 8, which is where you're reporting your revenue. It's really only taking the receipts and not any of the cost of goods sold or the cost basis. So I think they've kind of stuck with that definition.
So kind of anything you deposit into the checking account.
Yeah. So and I know it's for the gross receipts, you do follow the book reporting as well.
Well, that's interesting too, Matt, because in 990s, of course, you don't include in-kind and you don't include unrealized income from investments. So I presume you excluded as well for determination here? Or
But yeah, I mean, I guess just kind of making sure with the in-kind, if in-kind services, but if it's if it's a non-cash contribution, that would get so if it's, I mean, just trying to think of kind of in-kind as in you know, they're giving you food, something like that, that would qualify as a non-cash, that would be included.
or use of a gym for after-school activities or something like that. So that would not be included in gross receipts.
Right. If it's not included in, if you're not including it in as a contribution on your Form 990, so it's following.
Okay, that makes sense. And also, most of our organizations that we're talking with today probably have significant unrealized investment gains in 2020. So that is obviously one that wouldn't be included.
Mm-hmm.
So let's in the comparison for between 20 and 2019, can I use any quarter in 2020 and compare it to any quarter in 2020 and 2019, or tell me how that has to be done?
Yeah, that's it's calendar quarters. So you can't say, well, let's see, May, June, July was really bad for me, and that's going to be my basis for a 25% reduction. It's going to have to be April, May, June, or July, August, September, or what have you. It'll be a calendar quarter for purposes of defining that 25% reduction.
And then it has to be, can I use the third quarter in 2020 versus the first quarter in 2019?
Nope. It's got to be the same quarter. So
Same quarter.
you know, we've had a lot of people, particularly in businesses that were fairly new, that have said, gee, can I use, you know, fourth quarter 20 as when I was really getting hit? Can I compare that to first quarter of 20? No. It has to be fourth quarter of 20 against fourth quarter of 19, third against third, second against second, et cetera.
How would you document? How would you suggest you document the reduction, the 25% reduction in gross receipts?
And the application doesn't really give you exactly what. I mean, I think the fact that they've made it, they've extended it so that you could compare 2019 calendar year 2019 versus 2020. I think they thought that would make it easier, whether you'd have a tax return or financial statements available, and whether it essentially you just need to make sure that you basically have enough there to support the receipt. So whether that's interim financials, I don't know if there's reports or anything, but beyond kind of making sure that whatever you're providing will support the number, there's not a whole lot of detail.
You know, they're being a little bit prickly about some of it, though. So if you have quarterly financial statements and they're unaudited, then you need to sign on page 1 that to certify its accuracy and initial each subsequent page, because it's an unaudited financial statement. So you're basically attesting to its accuracy. That's if you're doing quarterlies. If you're doing an annual, because you don't have quarterly financials, now you got to provide a tax return. That's great. Who's done their 2020 tax return? Not I. So guess what you have to do? Do your 2020 tax return and certify that the gross receipts numbers that you filled out on your 2020 tax return are what's going to ultimately be filed with the IRS. You don't have to send it in yet, but they still want you to do it. So that's if you don't have the quarterlies and you're going to use a full 2020 against a full 2019. In some instances where maybe it's a smaller business and what have you, may just be able to produce bank statements that shows, oh, here's all my deposits during this period, and let's look at the bank statements from the same period in the prior year, and look, it's lower, right? So that could work in a cash basis situation. I don't think it'll work real well on an accrual basis, but nonetheless, there's ways of being able to support it, but they're being a little prickly about it.
And it does make it a little bit more challenging where a lot of nonprofits are on fiscal year. So even if you did give your 2020 your 2020
Yeah.
tax return may be fiscal year ended June 30, 2021.
Right. Yeah. Good point.
Here's some quick ones here for you that are coming in from the group. Can we apply for 2.0 pre-forgiveness for 1.0?
Yes.
Yeah.
How's that for quick?
I like that. Quick, rapid fire. What if I have yet to use all my proceeds? Can I still apply?
No.
I'm
You
like,
mean I assume you mean proceeds from the first draw loan
I'm
from
sorry,
2020. Yeah. You have to certify that you've used all that money
before you apply for the second.
before you apply for second draw. Yeah.
Okay, done with the open-ended questions. Now we're going to go into the deeper ones. So
Those were fun.
I know. How do you calculate the PPP 2.0 loan amount? What is included in a payroll cost? Matt?
So payroll costs, think salary, wages, commissions. So that's up to 100,000 annualized per employee. That hasn't changed from the 1.0. Plus, your employer provided group health, dental, vision, which we always thought that was in health, but the CAA clarified that dental and vision are included, and they've also added life. Group life and disability as well, and also employer provided retirement. And then there's also any state and local taxes assessed on employee compensation. So that's unemployment. A lot of nonprofits are reimbursable, so you don't necessarily have the FUTA and SUTA taken out.
Let's venture into the ERC world for a second. So as an exempt entity, I don't pay income taxes. So why would the ERC be of interest to me?
Fortunately, it's a payroll tax credit, and so the easiest way to take it is on your Form 941, so your quarterly payroll tax report. So, and it is refundable. So it is all nonprofits who are eligible should be able to take that.
So what you're saying by refundable is if your credit exceeds your taxes at any one point in time, you're going to get a check.
Right, but I think for most organizations, it's you would if you took it on your 941, you likely would have the payroll taxes there. Alternatively, instead of doing it on your quarterly payroll tax, you could file a Form 7200. So basically, that's an advanced refund, and that way you'd get the funds quicker.
Our client Karen has a question here. It says, is all payroll during the PPP period excluded from being used for the ERC?
Simple answer to that is yes. The question that's in play on this, and one that would require some modeling and analysis, is let's define what that covered period is for the PPP. So if you'll recall, throughout all of 2020, you had throughout the second half of 2020, because they changed the rules on this one too. You have either an 8-week covered period to spend your PPP money, or a 24-week covered period to spend your PPP money. Nothing in between. It was a binary choice. With the new act that came out between Christmas and New Year's, they now are saying retroactively, hey, you can pick whatever time period between the 8 and 24 weeks that you want. So that can be very beneficial in a couple of situations. One, around the 3510, where you're having to certify economic necessity. Let's say late in your 24 weeks, you had to do a few things that may not necessarily look good on a 3510 form, but you'd already spent all of your proceeds well before that time. Great, change your covered period before you file your forgiveness to be something before that potentially negative event transpired. Same thing around ERC. Let's say, for example, that you got into a situation late in the covered period, the 24-week period, where you did have some people that might have gotten you qualification for ERC. If you have the ability to cut off your covered period a little bit earlier, still get full forgiveness, now you've opened up that payroll that might be, say, in weeks 20 through 24, for example, of the normal 24-week cycle for PPP that you could apply against ERC. So you can't double dip at the same time. I can't say, well, I paid Matt to sit around and do nothing. and I use PPP money to do that, but now I want to go get an ERC credit on top of that. You can't do that.
But it sounds like you could, if planned correctly, you could sequentially have a PPP
Yes.
1.0, then an ERC, then a 2.0.
That's exactly right. So for example, the ERC period for 2020 began March 13th. Most people didn't get a PPP loan any earlier than April 9th, and many quite a bit later than that. Well, that period from March 13th until the day you got a PPP loan is something that you can look at for ERC purposes. Same thing on the backside. If you got a loan, say April 15th, your 24 weeks ended September 29th. You've got all of Q4 available to you as well to consider for ERC purposes.
You know, we have a number of arts and arts, performing arts and museums in our audience today too. So Matt, maybe you could talk about the Shuttered venue credit for a bit.
Sure.
And what kind of credit is it, by the way?
So it is not a credit, it's an actual grant. It's similar to, I guess, if anyone received the sort of that EIDL emergency grant, that kind of that 10,000. So it is a grant. There's no, it's only allowed to be used for specific purposes, which are payroll, rent, utilities, etc. But you're not, you don't have to file for forgiveness like you do with the PPP. But I think probably the key takeaway is you can have PPP 2.0 or the shuttered venues. You can't have both. So I think a lot of organizations are going through right now and making that decision as to which they go with. So the shuttered venues is available for any live venue, operator, promoter, theatrical producer, or any live performing arts organizations. And this also includes museums, motion picture theaters, and also some of the talent representatives. So I think there's kind of that component as well are eligible. And there are specific definitions. So I think anyone who's looking into that, kind of what to be a live performing arts organization, kind of do you fit within that? Same thing with the museum. Museum, I know there's sort of that requirement that you have kind of like a fixed amphitheater or classroom type location. But the amount is up to 40% of gross earned revenue. And now they use the term earned revenue, and there is, when you look to the qualification, there's different tiers, and it's based on reduction in gross earned revenue, which is not defined, but kind of they could have used gross receipts like they did in PPP, but they use the term earned revenue, which really is kind of, think about it, ticket sales, kind of the not contributions, investment income. So really what they're trying to do is if you had a museum or performing arts center that had ticket sales, because you were closed, you didn't have that and had that reduction. So the maximum amount would be up to 45% of gross earned revenue from 2019, or the cap is 10 million. So we talked about the cap of PPP2 being 2.2 million. There is the potential for more. But if you do look at the SBA almost 2 weeks ago, came out with the timeline and the schedule for there's first priority, second priority, and then there's sort of supplemental. Is the priority timeline is for borrowers or organizations with 50 or fewer employees. So if you have 51 or more employees and qualify, you may not be able to qualify until 61 days after opening, after the program opens, which we don't
haven't opened it yet.
Yeah, and we don't have any details yet as to when that will happen. So, I mean, I think the big question is, will the money run out? I don't know. I think that's sort of
won't run out if they don't open the program.
What they do, I think the concern for a lot of the larger organizations is, gee, if I'm towards the back of the line,
yep,
is there going to be any of the money allocated on by the time we get to day 61?
Right.
So I think that's what a lot of organizations are wrestling with. But it definitely, if you do the math, you're probably better off. You'll probably get a bigger amount from the shuttered venues, you don't have to go through the forgiveness process and the like. So,
and there's a second draw on that one too.
mhm.
Of up to 50% of your first loan amount, so, or grant amount, I should say. So it's, I mean, if you're one of the bigger ones, you could get 10 million the first time, 5 million the second time, assuming the money's there and available. So you get $15 million grant. That's a lot better than you're going to do in a PPP program.
I got a couple questions that I hadn't gotten to that came in early. It says 2020 bonus incentives achieved to be paid in February 21. Will this qualify for the 21 PPP loan and be part of forgiven?
That's a, if it's paid in 21,
Paid in 21, it says.
again, and incurred in 2020 based on performance.
20.
So yeah, that it's the rules around paid and incurred are kind of goofy. So let's spend a moment and talk through that. So think about it in 3 different points in time. Before you got the PPP disbursement, during your covered period, and after your covered period. Okay. So the easy part's during the covered period. Anything that was incurred and paid during the covered period automatically goes into the forgiveness bucket. Now let's deal with the front and back end. On the front end, anything that was paid during the covered period but incurred prior to the covered period also goes into the forgiveness bucket.
Right.
And on the back end, anything incurred during the covered period but paid after the covered period goes into the forgiveness bucket, so long as that payment happens in the next regular pay cycle. So in this example that you're talking about, this is paid during the covered period, incurred prior to, and because it's being paid on a normal schedule, I would argue that yes, that should be included in the forgiveness.
Makes sense. Gentlemen, I'm going to ask you to look into your crystal balls here. Yeah, we got vaccinations coming down we're hearing about them. Hopefully we'll all be getting them soon, whether it be 1 shot, 2 shot, whatever it might be. As of tomorrow or day after tomorrow, restaurants are open again, at least for takeout, or excuse me, outside dining, manicure, gyms are open, all that sort of stuff. We're seeing a lot more people wearing these and using this. Is there going to be a PPP 3.0?
My guess, and it's simply that, a guess, because so far my crystal ball has been very hazy in trying to predict anything the SBA has been doing. My guess is the answer will be no. If anything, they will just extend the current program perhaps for another quarter, depending on how the economy responds through all of this. By the middle of the summer, we'll see where things are. Hopefully that's in a whole lot better place than it is today. So my guess is, if anything, they will just extend the current program and that will be it. But that's, again, 100% guess on my part.
What do you think, Matt?
I kind of gave up predicting once I went through the entire HEROES Act in May, and that sat for a long period of time. So I'd say it's really hard to predict. There's been a lot of discussions on the checked additional funds to individuals, the 1,400 to get them up to the 2,000. I haven't heard anything specific to this. I know there's been a lot in the nonprofit world. I think there was a lot of organizations that have been pushing for very specific nonprofit programs. I know they sent a letter to congressional leadership about really kind of pushing, kind of extending the amount of contributions that can be taken above the line for non-itemizers, and also some specific programs designed to really help nonprofits. I think it's more likely that they may see that, but
Yeah.
Really hard to know anything on the PPP.
Yeah,
3.0.
I would agree with that. I would say if there was anything additional that they would do, it would be very targeted. perhaps to restaurant industry or a hotel industry, the very hardest hit of the bunch, gyms and all that you mentioned, Tom. I think they may do targeted programs in those very specific areas, but the broad brush program, my guess, will probably not happen.
So, in concluding, no Armanino webcast would be complete without a commercial for our services. And as we've demonstrated, as you two gentlemen demonstrated that you're experts, can you bring that expertise to the nonprofit organization, and what form and fashion would that be, and how would somebody reach out to you?
Real easy. Yes, you're right. We can put our little commercial in here at the end. We've got a whole team that this is what they're doing, is helping entities apply for loans, apply for forgiveness. We've got subject matter experts that can help on a 3510 form. We've got subject matter experts that can help on an ERC. So there's a lot of different ways that we can help you. As it relates to the applications themselves, we try to make it as simple and turnkey as possible, recognizing that none of you really want to know all of the rules around forgiveness and exactly how to do this. Why become expert in something you're going to do probably once, maybe twice in your life? So we can basically handle all this stuff for you. We've got a whole process to be able to request information from you. You send it to us, we do the rest, give you an application ready to sign, and away it goes. If you're interested in anything like any of these things, you can visit the website that you see at the bottom, which is learn.armaninolp.com/SBA. And of course, if you do want to do it yourself, we have what we proudly crow as the greatest assemblage of FAQs in the world as it relates to PPP. We are now up over 600 questions, getting close to 650 on the website that you see here, that relates to everything around forgiveness, as well as about 150 questions that cover the new second draw and first draw loan rules and eligibility and calculations and definitions, as well as a bunch of questions, about 30 or so on the ERC. So if you really want to dive into details, we have answered as many questions as we possibly can handle on this website here that you see. So please avail yourself of these resources if you think it would be helpful.
Gentlemen, you truly come across as experts. I'm impressed. Thank you for your time. Everybody in the audience, we're almost there. Stay healthy, be smart, and look forward to seeing you all without masks. Thank you.
Thank
Thanks,
you very
everyone.
much.